So you want to know, why are home prices continuing to rise and how are people continuing to take advantage of a market that most people are unaware is doing very well? Well, let's dive right into this month's edition of the National Housing Market Update and Keeping Current Matters. I'm Justin Martin, and as you can see here, most agents know what's happening. Good agents understand what's happening, but great agents explain what's happening. And for most of the world, they're looking for a simple explanation to better understand what really is happening in the housing market and how does that impact me. So as always on these monthly editions, we're diving a little bit into the past, the present, and the future on what you can expect when it comes to the real estate market. Now, as always, we're doing two things exceptionally well to provide for you. And as you look at taking the data, but then communicating that simply and effectively, we're trying to make sure that the data you are listening to is told in the context of a story of how it's impacting homeowners and those that are looking to get into the market of home ownership for the first time. So let's dive right into home sales. And as you can see, the existing home sales has declined by 16%. Now remember, in 2021, we had over 6.5 million homes sold in America. This year, there's going to be about 4 million. There was only about 5 million last year, which is really where you start looking at these numbers. It's been a 2-year slow decline in the amount of transactions that have rapidly decreased. And that's because of the unicorn market that we saw in 2020 and 2021. So the unicorn years we kind of remove and we keep everything in a context and remember that this year is very equivalent to that of the amount of home sales in a traditional real estate market. Now there's two factors though that are driving the current sales activity. The inventory that is unavailable, but we'll just say inventory availability and mortgage rates. Now, unfortunately, both have been unfavorable to buyers. Now, one of the things that you'll better understand though is it's also unfavorable to sellers who are sitting on a certain interest rate who potentially could be buyers. But remember, unfavorable is only one side of the story when it comes to that of opportunity. And what I mean by that is affordability is a little bit unfavorable when you look at the overall interest rates. But as you look at this slide here, when it comes to inventory, understand that we are at 3.3 months of inventory, which is extremely low. If you go all the way back to 1999, look at this outside of the unicorn years of 2020 and 2021. And then the rebound, there's actually never been a better market for sellers or that of the anticipation of home prices appreciating. So inventory is the supply. And when there's demand, we know that in a market where there's less than 6 months of inventory, which is a neutral market, most of the time home prices appreciate. So a lot of buyers right now that are new to the market are able to take advantage of homes that are appreciating. And a lot of these homes that are sitting on the market a little bit longer in this transitionary period, there's great deals to be found. And as you start looking at what we'll talk about in a moment, which is, as you can see, the reason why the inventory is so low is because as you look at 14 straight years, builders back in the mortgage crisis of 2000, as you can see, 4, 5, 6, 7, 8, they got hurt quite a bit along with homeowners who then decided to stay in their homes longer for a longer period of time prior to 2005. So we'll kind of cover the fact that people aren't staying in their homes longer, builders weren't building, and we had about 14 straight years of below average completions of new homes, making it difficult for inventory to catch up. And as you can see, like we were sharing, the average tenure for homeowners was about 6.1 years, all the way up to 2009. And as we look at really over the last 12 years, people are staying in their homes for a longer period of time now. But what's unique about this is this unfavorable position at the moment is very favorable for first-time buyers who don't always have a lot of the advantages to compete in a market, which we'll talk about in a moment. So as you can see here, 6 months of inventory is a neutral market. So we are 50% light on any given month, as you can see, or short to actually getting to a neutral market. So we are in a very strong housing position. And as you can see, whether that be new listing count as of August, we're down compared to several years. As you start looking at the active listing count, we're down dramatically. So this is active listings are those that are sitting. So this is a good indicator of showing demand and how much opportunity there is for people who are looking to sell and those buyers who don't really have the ability to compete right now. And as you can see, total listing count again from 17, 18, 19, taking out unicorn years. What a great position to be in housing if we're talking about strength. Now, there's a lot of challenges from the strength because of these constraints. But as you can see, listing counts are low in every category compared to the last 3 normal years. Now, Realtor.com published, while inventory continues to be in the short supply, August witnessed an unusual uptick in newly listed homes compared to July, hopefully signaling a return in seller activity heading toward the fall season, which typically is the best time to buy a home. So a lot of times in the fall, there's less inventory. Sometimes that inventory is sitting on the market and there's a great potential for buyers to purchase properties. Springtime, there's a lot more demand leading to a better opportunity for selling a property. But check this out. For most people who have studied the markets for more than 30 years, they can't remember the last time we saw a uptick in new listings from July to August. And if you look at the last 7 years, we have never seen that. So what's really interesting here is this is telling us 2 things. Is one, either people are sick of waiting, you let me know, or 2, they need to sell. And if you look at either of those, sick of waiting and now deciding, or needing to sell, it backs a lot of what people are unfamiliar with, which is there are 11,000 homes sold every single day. That's 8 homes every single minute. There are still homes that get sold and purchased all day. And we'll talk about a couple of those categories of who are doing it right now. But before we do, let's look at the lending landscape, because that was the other piece around being unfavorable. So there is no one indicator that will indicate what's going to happen with mortgage rates, but there are a couple that we can look at. And lately it's been that of what's happening with inflation. So as you can see, if we go back to the 70s and 80s, as that inflation numbers started to really drop, sometimes we saw a stabilization of interest rates, a rise of interest rates, to then eventually a long-term decrease in the sustainability of coming out of a type of inflationary crisis. So for most experts, what they are expecting is that the mortgage rates will have a 6 in it by the end of the year. And by the end of next year, we may have a 5 in it. Now, when that happens, though, is that all these people waiting that come back in the market, it's going to make that demand for lack of inventory, unfortunately, using some very blunt language, a bloodbath. And we experienced that knowing that there was an immense amount of demand and low inventory during the unicorn years. But those rates that we'll probably never see again is what's the separation between this future one and how bad it was previously. But we can learn from the past, which is if you don't have a lot of advantages, down payment, other income, ability to compete, right now is probably the best time to get in the market. So then that way you don't have to compete. You can take advantage of some of the benefits and in the future ride the long-term real estate investment and refinance at a point where a lot of predictions are that rates won't get any lower. So before we dive into who's in the landscape of purchasing right now, is if you look at the term Nepo home buyers, and this is for a lot of people in the professional landscape of real estate and or mortgage, this term is being used in many facets of publications and experts' opinions. And this is just for those that are using gift and or support from family members in order to buy a home. So as a result, a large share of young homeowners can be labeled this, meaning they receive family money to purchase a home. So 38%, in fact, was the last study of those underneath the age of 30 purchasing a home received support from their family. Now, what other support like Forbes shared is down payment assistance can help first-time home buyers who don't have help from family to afford a home. Rental assistance can help families reduce their costs and help them save up for a down payment. So the context behind this is right now, down payment assistance can be accepted at a higher level of willingness from homeowners due to the fact that the demand has not come back at an extreme level that we most likely will see when we see a 5 or potentially a 6 in the mortgage rates. Now, how does all this impact home prices, though, is what most homeowners are asking. And for many of you who, again, the headlines do more to terrify than clarify, is that 37% of people at the end of 2022 believed home prices were going to go down over the next 12 months. Now, the challenge with that is, well, guess what? When, yes, you see a lot of negative news, and we start looking at the percentage of people who then change their opinion, you can see from January till July of this year, it changed immensely, is that unfortunately still 1 out of 4 people still believe prices will depreciate. So if you're congregating, there's 400 people at your spiritual service, that means 100 of those people in there, though, think the pricing will depreciate. So the challenge is the perspective that needs to change for many people to better understand some of the truths in real estate, which is supply and demand, but then some of these facts. So as you can see here, the percentage change in home values on the back half of 2022, we saw a correction, and that is the graphs in red. But as you can see, ever since January, every single month, we've been seeing appreciation in housing. So home prices have stabilized, they continue to appreciate, and based off this inventory and the demand that is continuing to meet the expectations based off of availability of homes and those that will always either get sick of waiting and or need to purchase real estate, it's still the number one long-term choice of investment. Home prices will continue to go up every single month. Now, there may be some pockets, which is why speaking to your local market expert is very important. And where do we really validate all of this is the Home Price Expectation Survey, which is a nationwide panel of over the top 100 economists, real estate experts, and investment marketing strategists, which is where this information is brought to you every single month. Now, if you ever want to sit down for a 15-minute consult to find out how does it impact your local market more, let me know, and I'd be happy to provide you that data. But as you can see, from a December to December as forecasted, in the third quarter of 2023, we're expecting home price appreciation over the next 5 years. Now, that number for 2024 may seem a little low. Well, the reason why is because they haven't updated their numbers for 2024 like they have 2023. So most likely that number will be in the threes, and who knows how much higher these things can move. As you can see, look what at the end of the year last year, the major parties, part of that home expectation survey, all of their original forecasts were quite negative when it came to what they were going to think was happening, which is depreciating values of homes. And look how much all of those places, their current forecast has changed. Just to remember, though, the 48-year average monthly price movement is that every single month we see some seasonality, and it'll be very interesting to see what happens over the next 2 months. If we continue to see an uptick in new listings, that's a sign that people are deciding to sell. And as you look at that 48-year average, you can see through the first half of 2023, we have outpaced the normal average amount of appreciation, meaning the housing market is even stronger or more robust than a normal market. What does that mean, though? Well, congratulations to all you homeowners and those people with equity. As you can see, 70% of mortgage rates that have less than a 4%, that's the challenge that we're up against with what we were talking about around the unfavorable reasoning for why people would sell, buy, and or invest. You can see 26% have less than a 3%, 44% between 3 and 4, and then 20% between a 4. And you can see there's just a very small percent of the population, but that's also because a lot of people did do what you've heard, which is refinance or date the rate all the way until you can get the best interest rate, and then you commit to that long term. So as you look at lock-in rate limit new inventory, that is a truth. They call it rate lock, is that sometimes we may not see more inventory coming, and that's just because people with less than 3%, you could look at different factors, they're not going to sell. Those between 3 and 4 are probably not selling. They probably hold their real estate. So we have a smaller percentage of people who are going to unlock their inventory. And until we start to see much more completion of new build, which just unfortunately is not available from the 14-year gap we had, you can see we've got a very healthy real estate market, and there shouldn't be these fears of crash or correction until you hear it from experts like myself and others in the field, compared to, as you know, the headlines that are misleading. Now, mortgage rates are less relevant to older homeowners. So you can see of the 20%, 6% of homeowners, 43% say it's because they would not need a mortgage to buy a new home. So about 1 in 4 U.S. homeowners say high mortgage rates would not impact their decision on when to sell their home. That's because for a lot of people who have so much equity in their home, or as you look at a slide that I'll share in a moment is the amount of percent of people who actually own their homes outright can still make a sale and go purchase where they want to buy, most likely maybe not even needing a mortgage. So mortgage rates are less relevant to older homeowners. As you can see, 35% for the boomers, 23% for Gen X, 14% for millennials, 20% for Gen Z. That millennial stat is very interesting, which also leads to, if that's not impacting them, then these rates are not going to prevent them from wanting to sell and buy, since a lot of them over the last several years purchased their first property and still have a move up one to settle into. So as you can see, that Americans sitting on tremendous equity, 70% have paid off their mortgage or have at least 50% or more equity. So worst case scenario, if you look back at the mortgage crisis, we saw homes depreciate roughly or close to about 30%. So even in a complete collapse, there'd still be 70% of people who still have more than 20% value in their homes. Now, what's interesting about this is 40% of people have their home paid off. And the likelihood, as you can see from how strong and robust the market is, a collapse is just entirely non-existent. Now, is it a fear? Sure, but that's like fearing something that's very likely to never happen in your life. We could call that a phobia. So we need to get away from some of these things that maybe are misleading to our decision making and get back to data-driven decisions, but backed by emotional reasoning, meaning that a market or logics are not the only reason to make a change in your life. Many people do it for happiness, joy, growth, love, and where they want to see themselves living, as if maybe time was something that's limited, which it actually is. So the deep dive into inventory is what we covered, a massive challenge when it comes to how we can overcome some of the unfavorable means, but at the same time, there's so much favorability towards those that are first-time buyers or looking to not compete in the market right now is amazing. And sellers, home prices are appreciating. There's still limited homes on the market, which makes it a great time for a lot of people to be able to transition from why they couldn't in the past, which was the fear that they sold now, they wouldn't be able to find a replacement home. Now, those that waited are just selling with their home values much higher than where it was 2 years ago, and their ability to go find a home, yes, with the higher interest rate, but most likely that one is not going to last forever, or potentially the home will. So from me to you, as always, thank you for giving me your time, continued to provide you just the data, not good news, not bad news, but the real estate news. So then that way you can make some good decisions, but most importantly, be confident that you actually know what's happened in the market, both a little bit in the past, today, and what's likely to happen in the future. And the future outlook is very strong around the overall health of the real estate market.